All right, hey, what's going on? This is Dan Keller, your mortgage advisor at KKOL Mortgage. I want to welcome you to another episode of Making Sense of the Markets. Today's Friday, December 1st, episode number 49. So, 49 weeks in a row, I've come to you with some market news and some information that you can either use or that you can share. And today I've got an incredible message for you. I'm going to share with you 7 pieces of proof that the mortgage markets and the real estate markets are loosening up, and they're loosening up in a good manner, not an unresponsible manner, but a good manner for you, whether you are a seller or you are a buyer. This information will help you. The other thing that I'm going to do is share with you some information that will have you think. If you think, and I get this feedback a lot from clients, that they feel like it's more expensive today in 2017 to purchase than it was back in 2000. And I'm going to give you real-time proof that is going to show you why that thinking, your perception, is wrong. And that today, 2017 and 2018, from a home affordability standpoint, it's the most inexpensive time to purchase in our lifetimes. So before I get into that, I want to recap kind of last week what the mortgage markets did. Mortgage rates actually went up slightly. The markets kind of sold off halfway through the week. The Dow was, I think, up at 350 points at one time. It settled back down today, Friday, and mortgage rates are still just right under that 103 mark. I talk about that a lot. What that means for you is it still means that 30-year fixed rates are still in the threes, upper threes, depending on your down payment, your credit score, and type of property finance. So if you have any questions in regards to your current mortgage or attaining a mortgage, reach out to me. My number's on the screen, and I'd be glad to give you some information on your exact situation. So let's talk about the 7 factors, healthy factors, that are proof that the markets are loosening up. The first, the Washington State Housing Finance Commission has a zero-down program here in Washington State. It provides a grant that allows for a buyer to purchase with zero down. Their debt ratios had a hard stop at 45% debt to income ratio. Just recently in the last month, they've raised that to 50%. So that's good, and I'm saying that's good from a zero down standpoint. Those loans still are very difficult to qualify for, but they're providing some flexibility on debt to income ratios. What that means, in a month ago, if a borrower came in and was capped at a 45% ratio, they may have only qualified for a $300,000 house. By raising that up to 50, it now allows that customer, that borrower, to qualify for a $315,000 house. So good news. The second thing, USDA, it's the other zero down loan program here in Washington State, has lowered their minimum credit score requirements to 600. Previously, it was 620. So that is some good news there. Fannie Mae and Freddie Mac. Fannie Mae just released some information a couple of months ago where they're loosening up. They're providing some flexibility depending on down payment and credit score and type of property purchased. They're loosening up their debt to income regulations and requirements as well, providing some flexibility up to about that 50% margin too. VA home loans, the most conservative, the most profitable and safe home loan, performing home loan in the country, 580 credit score now. So if one of our veterans maybe missed the mark on credit, went through some hard times with their credit, VA is allowing as low as a 580 credit score to qualify. A couple of other things. KKOL Mortgage has a 1% down conventional program. So typically you would have to put 3% down with that program. KKOL Mortgage has a program now that will provide a 2% grant. That's some more flexibility for a well-qualified first-time home buyer. The last thing I want to talk about is what's called a property inspection waiver. We're able to get property inspection waivers, which is basically no appraisal required. If you have a low loan to value, so a good down payment, 20% down or more, a good credit score, good credit profile, you may not need to order an appraisal or have an appraisal done on said refinance or property. The last thing I want to talk about is that affordability index. So those are the 7 factors. The affordability index is going to show you, and I'm going to put this graph up on the screen, that because of low interest rates today, regardless of home values, it's still less expensive to purchase today than it was in 2000. I'm going to provide a link to this article, helpful information. If you have any questions, please reach out to me. I want to be a resource to you. I hope you found this information valuable. If you did, do me a favor. Please share this with someone that you know, and would love to help anyone that you know make a smart decision surrounding their mortgage. Have a great weekend, and I will check in with you next week again. Bye for now.